like right here, watch. Okay, so we'll do it with Ford. 10,000 shares. Okay, I'll do it now. And I will make a tighter stop. It's going to be a 2-cent trailing stop, right? My risk is $200 on 10,000 shares of Ford. If Ford, what did I pay? 1444. If Ford goes to 1446, that's a free trade. Now I bought this a little high. I'm going to make this, bear with me. I'm going to make this 3 cents because I bought it like at a height. Right there. Oh, and well, never mind. It sold off. Anyways, the idea, obviously, like I could do it again, was as soon as it gets to my break, right? In this case, 2 cents, 1446, it's free the rest of the day on Ford. Think about it. If Ford went up another 10 cents today, that's $1,000, and I only risked $200. Does that make sense? That's what we're looking for.
Coach, you're going to show how to change it from a stop to trailing stop once you're in?
Yeah, I can do that now. You want to see it?
Please. Thank you, sir.
Yeah, absolutely. Okay. So this is how I would recommend you guys do this to protect you more at the open. Now I'm going to do it with Ford. I'm going to do it with Ford again with a real life situation right here. I love it at 1442. Let me see if I can get it at 1442. Hold on. You know what? Let me do it on a small amount. Because by the time I place the order, I might lose a ton of money trying to train you guys. Here, I'll do it with 1,000. Okay. So what I would do is I will right click Ford, close position, close an order entry. So out of the gate, I know I paid 1443, right?
Uh-huh.
So I'll put a stop at 1440. Boom. Right?
Okay, that's a regular stop.
Yep, just a regular stop. Okay, here, I'll do it at 1441 because we already know if it breaks 1442, it's just going to pull hard. Okay, now, if my intention is to have a 3 cent trailing stop and I paid 1443, as soon as this gets to 1446, I'll mark it in green to remind me. As soon as it does this, what I would do is cancel this, go in and create a trailing stop at that point for the exact amount, which is 3 cents. That covers me from
there up.
Yep, from where it is to what I paid. And now that is a free trade the rest of the day. And the only thing I'm worried about at the open is whatever my stop is. So maybe I had 1 penny stop, right? So maybe I'm risking 1 cent. It goes up 10 cents. Then I convert it to a trailing stop. I was only risking 1 penny at the time of purchase. Does that make sense? My risk is way less doing that than it is if I buy a trailing stop, because if I immediately put a 10-cent trailing stop, well, now I have a 10-cent risk out of the open, right?
Exactly.
Yeah, so instead I use a stop, later convert it to a trailing stop, minimizes my risk at the open, and then it allows it to run forever on a free trade. For those of you that want to do the Jimmy method, right? You can buy this here. You can sell this here. Look how many times you could have got to do this. If you did that on 10,000 shares of Ford, right? You would have made 1, 2, 3, 4, 5, 6, 7, and now it's up here $800. Every time it went up, every time it went down. Do you see it?
Is this just with stocks, Coach?
Yes.
Okay, thank
you. Yep. But do you guys see that?
And what would the investment have been?
Let's see, 10,000 shares, 144,200, and your risk is $100.